before we get started, let's check out the links in my description. We all want nice things. We want the car, we want a house, we want a high limit credit card. But if you don't have at least a 680 credit score, you're not even in the game. So click this link here to know where you stand and get your free credit scores from all three bureaus. That will be Experian, TransUnion, and Equifax. And also get your reports. If you would like to be free and become financially independent through entrepreneurship, click this link here to be free. If you'd like to get Cashback, which is a discount during shopping, please click this link here to see my favorite cashback sites. And if you enjoy the music you hear in the background, please click the link here and subscribe to It's So AC. Hello everyone, welcome back to Community Wealth. We're going to go over some information about Wells Fargo. I did a video the other day about how Wells Fargo was closing personal line of credits and portfolio line of credits, and how it may have an impact on your credit score. And today I found an article that goes a little more in depth about that. Okay, 1 second. One moment. All right, sorry about that. I got interrupted. Maintenance came over here. I'm at a resort right now, and so they came in and checked some things out. But anyway, I don't remember where I left off at, but I'm gonna go back and say, Wells Fargo, they got a few issues going on. They're not sure. Well, in any aspect with credit, you can't really be sure how it's going to affect your credit because every person's profile is different. But again, that's why I always say you got to focus on your own credit profile. And you can do that by clicking the credit monitoring link in the description below, getting your scores from all three credit bureaus, as well as your reports from Equifax, TransUnion, and Experian. So again, click the credit monitoring link in the description below and get all of your scores from Experian, TransUnion, and Equifax in your reports. All right. So we're going to get into this article and see what they're talking about. Wells Fargo account closures cast light on vague cost of a credit score hit. All right. This month, Wells Fargo announced it was shutting down personal lines of credit, a lending product consumers could use to consolidate debt, pay for surprise expenses, or even use as a checking overdraft safety net. The decision was made after an early 2020 review of its businesses, where the bank found that personal lines of credit weren't as popular as loans and only 40% of account holders had balances, a bank spokesperson told Yahoo Finance. The main difference between a personal line of credit and credit card is that the credit limit for a line of credit can be higher than for a credit card, making it more suitable for big purchases. APR for lines of credit are typically lower than for a credit card. And I think I mentioned that in the other video about Wells Fargo. I like line of credits. All right. I love them. Lines of credit are much better than credit cards in the simple fact that, like they say, a lower interest rate is usually larger, and there are no cash advance fees and things like that. Because if you try to use a credit card for certain things like buying property or buying, something large, you will get hit with that cash advance fee because you had to take the money off because they don't accept credit card payments. So you have to come in with a check, and for you to get the money, sometimes you have it on your credit card, but you can't swipe the credit card. You got to pull the money off. So that's when you get hit with that cash advance fee plus that high cash advance APR. With the line of credit, there's no cash advance fee because that's what it's for. The only difference is you can swipe your credit card. Line of credit, you don't get a card. You can use checks. I believe it's checks. You can transfer. You can get money, or you can withdraw from it. Just like a savings account. You can do the same thing like a savings account as a cash advance. As a credit line of credit. To me, it's more likened to a savings. It's like a glorified savings account, but it's credit. All right. That's how I look at lines of credit. It's a glorified savings account, but it's credit. It's like a glorified savings account, credit card hybrid. All right. That's kind of how it is. Because with a credit with a checking account, you don't get checks. You can withdraw, transfer, get money orders, get bank checks from a savings account. But with a credit card, you can get cash advance checks. You can get balance transfer checks. You can do all this stuff with a credit card, but it's a little process, and there are fees behind it. With a line of credit, there are like no fees behind it. Okay, so it's just kind of it's a lot simpler to use, and it's more economical to do so. All right, it's cheaper money. All right. Okay, let's continue. The news left a bad taste in the mouth of some consumers, primarily because reports emerged about how the closure might impact customers' credit scores. The San Francisco-based bank waited until the worst of the pandemic was over to move forward with its decision to get rid of personal lines of credit, given that its image was previously tarnished by the 2017 fake account scandal. Wells, no doubt, was more cautious about doing anything that would seem unfriendly to customers. In March, Wells Fargo began to phase in the product removal with a pilot program. After a 60-day, 30-day, and final notice period, feedback on the changes was better than we expected, a Wells Fargo spokesperson said. Not a single Wells Fargo customer should see their credit score suffer just because their bank is restructuring after years of scams and incompetence. Sending out a warning notice simply isn't good enough. Wells Fargo needs to make this right. That was from Elizabeth Warren. But when the bank unveiled the move publicly this week, a line in the FAQ section of the announcement resulted in a rehashing of the embattled bank's past with the open-closed account section, and some were not pleased, including Senator Elizabeth Warren, a frequent Wells Fargo critic. The bank said the closure might impact a customer's credit score, but it would not be considered a derogatory item on a credit report. And that's cool, but I mean, still, it may not be derogatory, but that line just completely disappeared. And if it was for a high amount, that's even worse. All right. A FICO credit score is based on a combination of factors: 30% amount owed, 35% payment history, 10% new credit, 15% length of credit history, and 10% credit mix. With Wells Fargo shuttering an account, there is a good chance it will have an effect on people's scores given the factors above, though the bank claims it does not determine or know the factors that make up a credit score. Whatever, bank. That don't even sound right. So, not to mention the credit line and the credit amount, but also the credit history as far as the payments and things like that. So if you were utilizing that trade line and you were using it, you were like paying, you were withdrawing and making payments and things like that. All of that is going to factor in when that line disappears. All right. How much does 10 points cost? A lot or a little? Wells Fargo wouldn't say how many customers use these accounts, but did say the loan's variable interest rate will be locked at a reasonable rate, and then minimal payments will be required to pay off the rest. Other loan products are available if customers need more money, though they have to reapply. Now, that's what I say, okay, cool, listen. You're closing this account. You're doing it, not me. I didn't do anything. It's not that I paid it off or anything. You're closing the account. Now, you're closing the account. That's going to impact my credit score. Then I have to reapply, which is another hit on my credit. You close the account. Boom, I drop maybe 10, 20, 15 points or something like that. And then another 5 to 10 points come off because I have to reapply for a new credit line. Not a line of credit, but a new credit line. Maybe a loan of some sort or something like that. Right? I don't like that. That don't sound right. This leaves consumers with potential damage to their credit scores. There is no specific number of points tied to an account getting closed, but Credit Bureau TransUnion notes it can be significant enough to warrant keeping old lines open or at least being thoughtful on what to close. The fake account scandal likely led to dinged credit as well, as consumers who found an open credit card account then decided to close them. But like then, it is hard to quantify the monetary damage. The The bank said it didn't consider compensating customers for the potential credit score damage. Doing so would be difficult since a person's unique circumstances make for an incredibly varied impact. As Bankrate notes, the threshold-based methods of deciding who is eligible for what loans and what interest rates can make a single point matter. From its 2015 data, a $300,000 mortgage for someone with a 680 credit score would pay 3.709% for a 30-year fixed mortgage, while a borrower with a score of 639 will pay 4.899%. Remember, I always said the credit game really starts at 680. You could do it with under 680, as you see, but 680 is where that real life low interest rate high limit thing begins. Okay, the difference of those 41 points will result in an expense of $2,520 per year. If this loan was made with a 20% down payment, a credit score gap of 21 points will have a similar difference, according to Fannie Mae data on price adjustments. Now, you see, you might think with $2,520, that's not that much money, but you got to realize that's about $200 per month. And if you add that over the course of 30 years, think about it, 30 years. In 10 years, that's $25,000. So we're talking about a difference of $75,000 in 10 years. All right. 30 years. So in 30 years, there's a $75,000 difference. And that's just from your credit score being a couple of points difference. All right. Of course, credit scores only affect a consumer's cost if they're borrowing money, as well as the amount. So while 100 people's credit scores might be affected, it might be in 100 different ways. Knowing exactly how many points might come off from a closed account is, again, unclear. When applying for a credit card, 5 or 10 points might come off, only to return a few months later as the number of credit inquiries in a given period, which affects scores, changes. For customers who did use their lines of credit, the fact that they'll have to reapply for other loans presents another problem. Remember I mentioned that earlier? If Wells Fargo's closure of their prior account has an effect on their credit scores and credit report, do those changes a person's credit history affect the interest rate of new products? If this were the case, the closure of these accounts would result in more interest income for the bank. Slick. See how they just said that? Okay, you close my account, my credit score dropped. I do another inquiry. Of course, you're going off of the score before the inquiry, but still, think about it. My credit score dropped 10 points. I'm at 680, right? My credit score drops, let's just say 15 points, right? So now I go from 680 to 665. Okay, you want me to apply for a new product, but my credit score just dropped to 665 because of your closure, not because I closed it or anything, because of your closure, because you're restructuring. So now my interest rate on my line of credit was probably, let's just say 7-8%. But now, since my credit score dropped, on this new product, my interest rate is now going to go up to 15% because of your closure. On top of that, it might be a product that wasn't going to be low in the first place. It might start at like 10-12%. So now it started at 10-12%. Not even a good enough product to compete with what I just had. But it started at 10-12%, and then I'm going up even more percentage because you dropped my credit score. And now when I go to apply for something else, not only did you drop my credit score, when I had to reapply, it dropped again. Just a big mess. A bank spokesperson declined to answer whether or how the closure of the account would be factored into a new loan's interest rate via credit score. Whatever. So, again, all of this stuff is kind of, it's kind of slick. It's a backdoor way to say, hey, look, we're not making money off of these lines of credit. We're not making enough money for it to make sense. So we'll close it and you open up another account. You got to reapply. We might even approve you for it, but you got to reapply. And when you reapply, they're going to drop it again. But now, since we dropped your score when we closed that account, you're going to have to pay more for this new product. It's probably going to be a product you're going to pay more for anyway. But since your credit score dropped, you got to pay even more for it. We're sorry it happened to you because we had to restructure our books. But we have this other product for you. You're going to pay for it and you got to reapply. Well, we got it for you. and we still want you to stay as our customer. Crazy, right? That's just a game though. But again, if you want to stay on top of your credit, again, click the credit monitor link in the description below. Get your scores for all 3 bureaus and your report. See where you're at. If you need to repair your credit, go to the do-it-yourself credit repair playlist, and you can see how to dispute items off your credit report and things like that. Also, you need to make you some more money. You want to make a good $500 to $1,000 plus per week on your own time using your vehicle or using a rental vehicle. You can click the Wealth Dasher link and the Wealth Hire Car link. All right, the Wealth Dasher link is simply for you to use your vehicle to create income of $500 to $1,000 plus per week. Wealth Hire Car is for you to use their vehicle if you don't want to use your vehicle, and then you go and apply a Wealth Dasher where you can use the hire car to then create $500 to $1,000 plus per week. Okay, that's because you don't want to use your own vehicle, put mileage on it, damage, wear and tear. And if you don't have a vehicle, then you can use their vehicle for the damage, wear and tear. All right. Also, you want to know how I got 5 properties for $5,500? Click the Be Free link in the description below. If you want to know how to get cash back once you start making this money by doing your Wealth Dasher thing, then you can click the Cashback link in the description below. And if you like the music, subscribe to It's Oasis. Like and share this video. Subscribe to the channel. And as always, until the next video, let's get this money.